Before we start, we want to let you know that if you are interested in hearing about grain market price action and fundamentals daily, you can sign up for our Ag Hedge Hotline, hosted by expert market strategist Ted Seifert. It is totally free. And once you sign up, it gives you the chance to connect with us personally if you have any specific questions about the markets, strategies, or agricultural commodities as a whole. If you are interested in learning more about how these markets work and how to make them work for you, it's an easy and perfect way to take that first step. Link is in the description below to sign up for that. Totally free, zero commitment. Broadcast. Welcome to the 25th episode of the Zaner Market Cast, your one and only spot to keep up with all of the agricultural market news. My name is Joe, and I'm here with
Zaner Ag Edge's Dan Hussey. How's it going, everybody?
Dan Hussey. How is it going? Everybody wants to know. All the listeners are checking in saying, how is Dan holding up with the new baby? Say the name of that new baby again.
Yeah, baby Michael. Baby Michael Barrett Hussey. Yeah, he's delightful. We're holding up. Mom's doing great. I'm doing okay, everybody. Thanks for checking in on me. No, but for real, we're couldn't be more delighted and blessed with our new little bundle of joy. He's becoming a better sleeper, so I'm getting a little bit more rest, and it seems like it's at a time where these markets are starting to pick up, and generally speaking, we're starting to see at a time of the year where we think there's a little bit more to talk about.
Glad you said that, because today we're going to talk about a few news stories. We're going to open up with a couple news stories, and then after that, we're going to tell folks exactly where the markets have been and exactly where they're going to go. Just kidding on the second part. Yeah, just kidding on the second part. But we're going to talk about everybody.
Knock. Here's
and we're seeing a lot of by any measure, you look at what's happening here, and the technicals are telling you, hey, this could very well be a tipping point. And so for folks who are not paying attention and maybe getting ready for harvest, or for folks who have been paying attention and maybe grown a little fatigued at some of the sideways price action we've seen, I would respectfully suggest that now is a very serious moment in this year's price action for people to pay attention to, because it seems like we could be moving significantly in one direction or the other. Don't you think?
Absolutely. And we'll talk about some of those opportunities and which way the market's moving here after we cover a couple of these new news stories that are affecting markets and everything today. National restrictions on pesticide malathion, subject of new lawsuit from DTN here. A final biological opinion that led to national restrictions on the pesticide malathion is the target of a new lawsuit filed this week that alleges the decision by the U.S. Fish and Wildlife Service violated the Endangered Species Act. In the new lawsuit filed in U.S. District Court, the District of Northern California, Northern California. Wow. Maybe that sleep hasn't caught up with me yet. The environmental groups led by the Center for Biological Diversity said the USFWS's biological opinion contained numerous analytical shortcuts and arbitrary policy choices. The group said in the new lawsuit that the label restrictions may reduce harm to some listed species, but the most threatened and endangered species are not at all benefited. The alleged USFWS policy choice conflict with the regulation and policies, as well as with the Endangered Species Act itself, and that it was arbitrary and capricious. Man, they really don't like that thing. They could have just said, we don't like it, right? USFW's errors include its decision not to implement species-specific conservation measures to protect against malathion for many species, and its failure to consider consequences for each individual species. And the malathion is largely used, for those who do not know, to control mosquito populations as well as aphids and other crop pests. In August of 2023, the EPA announced national restrictions on the use of malathion, and while these minimal restrictions to the pesticide product labels might reduce some harm from listed species, at the margins, most threatened and endangered species were not benefiting from them, the group said in the lawsuit. The group said that this widespread use and mobility in the environment was compounded by its high toxicity to every animal every animal taxonomic group. So it doesn't affect, no animal is safe from this stuff, and it affects everybody. In October 2017, the USFWS concluded in a draft biological opinion registered uses of malathion products were likely to jeopardize 1,284 threatened and endangered species. So looks like one more pesticide on the books that is getting the hammer from regulatory authorities.
Coming under some scrutiny, deserved or not. So it's a lawsuit. They're going to have to iron it out in court, where they come from these general EPA directives into a court of law where they have to get a bit more specific and provide a bit more data in an open and legal forum. Correct. So it could be a good thing for.
Sounds like the government spending government money.
A little bit of daylight. A little bit of daylight on that won't hurt anything. And funny. Last week we made a quick crack about we're from the government and we're here to help. Got called out on that by one of the three listeners that we have. Thought that was funny. And sure enough, after we make a crack about the government here to help, guess what? Here's the government and they're here to help. Farm aid. Right? I would have bet $100. You know what I mean? Right. Farm aid in the works. Sure enough, it was like 48 hours that headline came out over the weekend, or what was it, Monday night? I think maybe Beans reacted a bit. Farm aid in the works. Lawmakers explore temporary fix as farm bill stalls. This is from Chris Clayton at TTN. Chris does great work, right? Senator Jerry Moran, Arkansas, spoke Monday at the Kansas City Agribusiness Council's Ag Outlook Forum and suggested lawmakers are looking at passing a mini extension plus, quote unquote, to help farmers suffering from low prices. Moran said he had a moment of optimism when he spoke to Senate Agricultural Chairwoman Stabenow. Was it Debbie? Stabenow last week on the Senate floor. Moran said Stabenow is recognizing the financial situation for farmers is dire, and farmers can't wait for Congress to reach an agreement on a 5-year farm bill, which has been quite a long time coming, right? Along with potentially boosting commodity programs, Moran said Stabenow is looking for a way to accelerate payments. Right now, payments for the Title I agricultural risk coverage and price loss coverage programs are always a year after harvest. For many, and this is my insert and not in the article, but for many farmers, a year later might not find them on their farm, right? I mean, so really a lot of challenge.
We covered a story like this before where we were needing to do more upfront now because we're realizing these financial strains are a burden and there's no reason for it sometimes, right?
Absolutely. Right now, payments for the Title I, always a year after harvest. Any ARC or PLC payments in October, for instance, will be based on last year's harvested crop. Moran said his visits to farmers across Kansas in October highlighted some of the financial stresses producers are facing. The impacts are being felt by businesses that supply farmers as well. Moran also pointed to the agricultural trade deficit that is looking at $30 billion this year and $42.5 billion in fiscal year 2025. Moran said there has to be a way to revitalize agricultural exports or farmers will continue to struggle with income. Referencing the election, Moran also said it is the perfect time to remind both Republicans and Democrats that agricultural interests have yet to cast their votes in November, and movement on a farm bill and a commitment to get one done might be something that would encourage rural votes for whoever is the candidate running for office, including members of Congress, the House or Senate, and the presidential race. So Representative Moran pulling out the Senator Moran pulling out the big, maybe a reference, maybe not pulling it out of the holster, but referencing the big agricultural stick that is wielded in this country. A lot of influence, a lot of voting, as we, I guess everybody would agree, as it should be, because agriculture is such a huge part of our economy and the success of this nation.
Absolutely. And this isn't just the constituents of the voting base, right? I mean, which, sure, farmers and agricultural producers are definitely constituents in there, but they're also a supportive element and pillar of the not only economy but the GDP of this country. I mean, you only have city centers and urban environments without your farming because your farming communities exist. And that type of production, like, oh man, as a country, there's things like education and farming that you cannot survive without. Look at China, billion people. They're not self-sufficient on the food, on their food side, and they are, they're scared. They're always running around scared from that standpoint. We can't let ourselves get into that, right? We can't let ourselves get into that type of situation as a nation.
Ironically, we're going to next talk about December corn for the week. These weekly numbers, let's talk about the exact part of the equation. We know exactly where this stuff was this week and where it went. We'll talk about where it might go here. Dees corn opened the week at 413. The high was 415, low 401.5. Last trade 401.5. Closed the week on the lows from the sound of it. That's down 11 3/4 in December corn, with the funds coming into today an estimated short.
11 3/4 on the week, correct?
11 3/4 on the week. Yep. I'm glad you caught that. 11 3/4 on the week. Funds estimated short about 130,000 contracts still. 10-day moving average 407 3/4, 18-day 405.5, 50-day 404 1/8. You and I were talking about the interesting technical setup there with the 18 crossing over the 50, but hemmed in by the 10. And so what does all that mean? Certainly it looks like a lot of spaghetti, but that 18 crossing over the 50 is at the very least interesting.
It's bullish, right? It's a bullish signal, right? Whether or not it means that there's an upside tick in the market is another discussion. I mean, there's other things. There's a trend line against the lows that is still coming up. You've got a bit of a cup and handle pattern, to the bottom here. But I don't like today's close, though, back below that 18-day for December corn. Not the kind of look you want to see, but, that doesn't mean that we couldn't, snap right back up into the highs. And this is all just a bull flag or a wedge, before a breakout toward 420 to 430 and towards that 55-day moving average above. 200 days seems like a lifetime away up at 456, but you can't discount, if we really caught a short cover, a reason to get up there, it could. But closing the week at your lows, having rolled over like this and on that trend line, it also is a sobering reminder that we're at that part of the year where there is, we got to remember there's potential of a wall of grain coming down the pipeline here. And there's going to be a battle over technicals and then that fundamental notion of, that wall of grain. So I'm personally in the camp. I think we'll see one more push lower, but as it stands, you could also make an argument that we've formed the right shoulder of an inverted head and shoulders pattern on the December corn, and break above 415 is that inverted neckline. So, if you can go either way here, and I think that's a big reason why we've been sideways in a range for about a month.
And we've been here before, right? Where we see bottoming formations and things that look technically
kind of grind, sludge,
positive. And then all of a sudden, the burden of the fundamental situation, the burden of money flow reasserts itself, and we go down and find new lows. And so, as we mentioned earlier, certainly a great time for, and even a lot of folks have been under strain. They don't want to look. These are good times. These are good. This is a good time to start looking again. This is a great time still
to get something done.
Yeah, absolutely.
Because 40 cents lower from now, you're going to regret it, right? Like, what's the worst? Calling the elevator and getting some sales done. I know there's a broker out there that'll talk you into, owning a call so that you still can have the comfort of knowing if corn goes above 420, you're going to have a piece of the action. But the truth is right. Like, you're not going to want to a week or two from now have your hand forced at a lower price. And that's what no one wants to see at this time of year.
By the same token, you're hearing tale of agricultural marketing services suggesting that folks should just go ahead and store everything. And in some cases, they're storing everything on top of stuff that they already still have stored.
And if you do that, there's an insurance policy called a put option that can protect that. Saying. You know what I mean? Like,
why weather another 50 cent downside when you can have and you look at December puts and March puts, and we're not speaking about specific strategies here at this moment, and you can call in and we'll talk to you at length. But really, the cost for these options is minimal to establish some protection. And a lot of folks that we talk to believe that the bottom is in, but that chart is telling you that while that could be the case, there is the potential for downside just as much, and I don't know that I want to assign odds downside versus upside, right? But if it doesn't rain, in South America, maybe we continue to rally. But if it does rain,
And Joe, on that note, I don't think we need to assign odds to upside or downside. There's pretty clear levels on these charts, the ranges we've been in. You don't need to be bullish or bearish with an opinion until you go above those levels. But one thing we do know is that as a producer, we already have an opinion on the market. You already have risk that you've taken. And so it's our job to think about offsetting it, right? So it's not even about directional. It's not even about direction at this point, right? I didn't mean to cut you off there.
No. What I'm saying is don't be right, be protected, right? And so
yeah, absolutely.
I won't belabor that. No beans opened the week 10.05. High was 10.22. The low 9.99. I think we did that today, right? Last trade was 10.13.5, and that was this morning. And it looked like, oh my God, beans will never be good again. Last trade 10.13. Actually,
I take that back. We did not. Yeah, we did not do that 10.99 today. Our low today was 10.01.
Okay, so we in during this week we got to 9.99, but even so, this morning that look on the chart was like, oh, here we go. But no, closed the day 10.13.5. That was up 7.5. Funds still short about 122,000 contracts, but we mentioned cup with handle, right? So you've got kind of a cup with handle formation here, or maybe we're rolling over. But yet again,
the 55 days right there, still resistance, right? That if that continues to hold and we just break below the 18-day, all it is a failed attempt to break and stay above the 18-day. And, like you said, we can still go lower here, but
fourth weekly close at 10 or above. That's not to be discounted.
There you go. No, it's not. That's psychologically good.
Held these round numbers. We held 4 in corn. We're back above 10 in beans. And so, technical fact, we managed to hold these big round numbers. As I can hear you're about to say it. You can unwind that all on Sunday night, which is absolutely true.
Yep.
Folks will have to pay attention. But fourth weekly close over 10. I'm not fading that. Got below the 18-day, but closed well above it. 18-day moving average, I think 10.05 3/4. Am I right about that?
Yeah, I think so.
10.05 3/4 at the 18 with a close of 10.13.5. That is not a bad second half of the day performance in beans.
Nope. Not at all. Would have loved to have seen it close above the highs yesterday and that 55-day moving average at 10.19, clear 10.20. Now you're taking out highs of the month. And there, at that point, I wouldn't say from a technical standpoint, there isn't much in the way of resistance again until 10.80 where the 55-day is and some old support. There's a big supportive range from $11 through 10.80 that, is up there that we can see. So all that being said,
small announcement.
We'll see.
Small announcement this morning, export announcement to just straight up China, not any unknown, but I think it was 122. You get the feeling that the bean market believes that there's more buying to be done, I guess is what I'm saying. That 122, certainly nothing to get excited about, but the Chinese have been here. Last week, they were pretty big. They were the biggest buyer. And at these prices, why would anybody be surprised?
Absolutely. Sorry, just got a call here. I'm responding to
D-Suite
quick test message. Customers come first, folks. Look at that.
D-Suite, we opened the week at 594 3/4. The high was 596. Low was 564. Last trade 569.5. D-Suite down 25 1/4 on the week. Funds estimated short 32,000 coming into the day. Maybe that number's getting bigger. 10-day moving average 575 3/4, 18 568, 50 560. Similar setup to corn with the 18-day crossing above the 50. Wheat, even though it was down big, you look at a chart and you say maybe that's holding up well, just like beans. A little bit of dryness for winter wheat, a little bit of possibility for more export business. For the U.S.
18-day and 55-day moving average, we broke above. It's been holding us support. Wheat's made progress and has otherwise been, kind of holding up here in a range well off of its lows. That's, for all intents and purposes, over the last week, it's looking like one of the better row crops in terms of where it is relative to its recent low. But we will see.
So wheat kind of always a wild card. But how about this in the WTF slot? Or WTH, what the heck slot for the week. December cattle opened the week at 178.90. High was 183.45. Low 177.75. Right. Last trade 183.27.5. up toward right near the highs of the day and highs of the week. That's up almost a full 5 points, 477.5 up on the week. Today, cattle on feed. Dan, retail sales earlier this week, surprise to the upside.
Yeah.
Money flow. What's going on in cattle?
I mean, you've got, all right, I hate to like
cattle
pull
futures.
the macro card out.
Let me say what's going on in cattle futures.
Right. And I hate to pull the macro card out and say, oh, we just had a Fed rate decision. They cut half a basis, half a point here, 50 basis points. That's a substantial shocker. I think that's a big reason the market kind of went risk on this week. It's a reason I think gold and silver are up. And I think it's a reason actually cattle prices were like, okay, money's easing. The economy may be stimulated. Oil prices are relatively lower. Yes, they're off their relative $65 low, but we're not screaming above $70 a barrel just yet. We're just above it. So I think there's a lot of stimulation to the economy. So when you take that into account with a market that sold off on bearish news with HP, AI, and all these other things, saw no real slowdown in packing, saw no slowdown in beef demand, beef prices have remained at just astronomical levels. There's no reason for cattle prices to go down fundamentally. All of a sudden, you see this shift then in the technicals, and what, in my opinion, is now a short covering rally as there's a risk-on move in the broader macro market as the Fed, shifts to a more easing monetary policy. I mean, cattle, don't get me wrong, cattle's due for a bit of a pullback here, but boy, looks like a run off the lows that, December cattle now pushing above the 55-day and touching the 200-day moving average today. That looks like a market that's completely flipped the script in terms of its trend, its technical, right? Everything, right? It's now going above every indicator you can say that would be otherwise bearish. Now it's, everything's turning bullish. And I think there's demand out there, and cattle on feed today will hopefully shed more of a light on that.
A lot of animals coming off grass into feedlots. Box beef prices not horribly under pressure, but certainly not rallying the same way futures are. It will be interesting to see over the course of the next week or so, or the next time we reconvene on Friday of next week, if this is money flow or if we're really going to take cattle for a run back to the highs. Because if cattle futures are rallying, that should mean that cattle prices out in the world stay firm, and that packers should be paying up for animals, and we'll have to see if that actually turns out to be the case, right?
Absolutely. And I pointed out December cattle above and pushing into some of those major technical levels. A bit of a leader here, kind of weird. Those November feeders, I would like to see them get out above their 255-day moving average here at 243. That opens the door. That's also back and fill price action into a gap down back in July that the market had, and we've been below. We get back above that level. Now you're talking 250, 255 levels that you can break out of and maybe make a new all-time high, a new high there. That would be the type of price action I would be looking for the momentum higher and continuation here. Otherwise, like you said, Joe, these markets have come a long way. We'll see with cattle on feed if those things can be sustained, and we've certainly got resistance to chew through on the way up here on this chart.
And so if I hear you right, feeders not necessarily looking like the leaders, but feeder cattle have been rallying longer than the fats. Feeders started to grind.
So they both bottomed, I guess, around the same time frame. But technically, the fats bottomed back on August 20th. Feeders didn't really bottom until September 9th. So there was a bit of up and down price action there. But since September 9th, they have been in pretty much lockstep higher. But the live cattle just had an earlier start. For whatever reason, they're, basing more, I guess. I haven't looked closely enough at the intermarket spreads there to kind of weigh some of the fundamentals, whether or not like supply should, narrow those margins or not, or if there's some kind of roll happening, right. Or hedging being done. But the moral of the story is that live cattle is up into some major resistance, up into some major technicals that feeders still have a little bit to go to catch up into. I think they both can do it, but that would mean that feeders have some catching up to do perhaps here in the near term.
And if you mentioned the macro card earlier, and my thought was that's the right card to play, because if you think about cattle in terms of the stock market and you look at long-term charts, cattle tend to trade pretty well with the stock market. Stock market
it does
liked the interest rate cut. There is also some talk that maybe now that you're beginning to cut rates in earnest, that an allocation to commodities from your managed or hot money, allocating money to commodities is going to start to get much more fashionable. Could start to get much more fashionable here in the coming quarters.
I think it's already fashionable if you just look at a chart like gold, right? I mean, if that's a proxy, right? Gold's at highs right now. I mean, yeah, seems like there are, and that's just one commodity in one vacuum, right? But nevertheless, here we are.
Terrific. Well, I think we covered it. Question of the week is,
what do we got, Carter?
Oh, that's a good one. Carter would like to know, what is your favorite sandwich?
There's no, and this can be, there's a few restaurants that I would go for, but an Italian beef, a dipped, just absolutely drenched Italian beef sandwich, just no peppers, no pickle, no cheese, just get that baby wet. Love it.
I know, Carter. So Italian, you want it dipped? Your Italian beef dipped?
Well dipped. Like if I go to Portillo's, I'm ordering a dipped, well dipped. Like, and then give me some on the side too that I'll dip in or just drench over it some more. I mean, let's face it, it's just like all good things, even lobster. Lobster is just a vehicle for butter. Italian beef sandwiches are just a vehicle for that au jus. Like, let's be honest.
I thought we were going to see that Notre Dame background there, where you said maybe a lobster sandwich might be your favorite sandwich. That's but no, Italian beef. No, I don't think that anybody who's
saying no Boston, Massachusetts, son. Please.
I don't know.
What is this? What is this? This is the Midwest, sir.
Carter from time to time will post a picture of me that shows that there aren't many sandwiches that aren't my favorite. Right. It's easy to notice by looking at me that I really can. It'd be hard pressed for me to find one I don't like. Maybe I would say no thanks to a portobello sandwich. I know that's not the question, but that's probably an easier question for me to answer: is what sandwich won't I eat? I'm off on the portobello. But the other side of that coin is that if you bring out 1 or 5 very rare beef burgers, American beef made into hamburger. I don't necessarily need anything fancy in it or on it, although a little bit of caramelized onion jam, maybe some cheese delivered by truck straight from Wisconsin would be fine.
I mean, this went from, I'm going to tell you what sandwich I wouldn't eat, to the most specific sandwich I have ever heard. Are we sure you're not making it up right now? Like carving it up for yourself right now? Wow, that sounds delicious.
Specifically made in Indiana by hand. No, like just any old burger.
Like Amish ketchup? It's got to be.
Do they have that? Yeah.
Real special.
Some Amish ketchup. Yeah, no, but I think my answer would be just a burger would be terrific. Yep.
That's fair. Well, there you go, folks. A burger for just a burger for Joe and an Italian beef for me. Easiest way to a man's heart is through his stomach. Thanks for listening to us today and checking out the Zaner Market Cast. If you need more, just because you can't get enough of us, you can follow us on Facebook or at Zaner Aghead on Twitter and LinkedIn at the Zaner Group. If you have a question you like answered on the show, there's a link in the description to do just that. Just follow the instructions. We'll answer your questions on air. Thank you again. Be sure to like, comment, and follow the podcast to not miss a beat. And we'll be back with you as price action develops. Take care, everyone.
Have a great weekend.